On February 2021, the Kalifa review was published with the aim of improving Britain's position in the financial technology sector. Among its recommendations was the creation of a task force meant to explore the possibility of developing a central bank digital currency, otherwise known as a CBDC. Fast forward to April 19th, the Bank of England announced that it would adopt this recommendation and work with Her Majesty's Treasury to bring the task force to life. But the UK has merely joined the race for developing the world's first CBDC. China and Sweden are already conducting public trials of their own digital currencies. While just a few countries are trialing them in practice, 80% of central banks in the world have stated that they are planning on issuing their own digital currencies in the future. So what are CBDCs, and why have they risen in popularity in recent years? Before we can delve further into this topic, first we must understand what is the role of central banks. A central bank is a bank run by the government, and their key role is to control a country's monetary policy. Monetary policy is concerned with the amount of money supplied within an economy at a given time. Controlling the supply of money is important because it ensures sustainable growth for a country, for example by controlling inflation or preventing economic slumps. Commercial banks such as NatWest or Lloyds are the primary suppliers of money in an economy through their provision of loans. Central banks control commercial banks by setting the base interest rate at which commercial banks can lend money. A high base interest rate makes it more expensive for individuals to borrow, and therefore banks supply less money. A low base interest rate makes it cheaper for individuals to borrow, and therefore banks supply more money. Therefore, by controlling the base rates, a central bank is in control of its country's monetary policy. Another function of the central bank is to supply the physical cash for use within the economy. The central bank prints the banknotes, which are then distributed to individuals via the commercial banks. Now that we understand what a central bank does, we can move on to discuss central bank digital currencies and why they have suddenly become so popular. CBDCs are digital banknotes which represent a country's official currency. They don't need the same tech as cryptocurrency to exist and can simply be electronic records stored in a digital wallet. Unlike cryptocurrencies, their value is backed by the issuing country's government. Also, unlike cryptocurrencies, CBDCs are not decentralized. A CBDC is issued and therefore controlled directly by a country's central bank. So why have CBDCs suddenly become popular? Central banks began to take CBDCs more seriously in 2019, after Facebook announced its plans to launch a private digital currency, the Libra. When backed with Facebook's massive and unregulated international network, Libra had the potential of becoming very widespread. If it took off, it could overshadow government currencies like the pound and make central banks lose control over their monetary policy, because Facebook would be the one controlling the Libra and not them. Therefore, central banks decided to beat them to the punch and issue their own digital currencies. This will familiarize their national consumer base with a currency that they can control, rather than risking being eclipsed by one that they cannot. Another reason for the rise of CBDCs are that central banks are afraid of super apps such as Alipay and WeChat. These apps are dominant players in the online payment industry in China in particular due to their convenience and consumer friendliness. These payment apps have attracted a large consumer base because of their convenience. They can be used to pay for anything, from lunch to household bills to investing in shares and stocks. They also eliminate the need for bank cards and enable easy mobile payment. In addition, they offer consumer-friendly functions, such as splitting household bills, and also have no international fees like banks do. The super app payment giants are causing problems by challenging commercial banks in two important respects. Because of their popularity, convenience, and good level of security, consumers would rather hold their money in a super app digital wallet rather than a commercial bank account. This deprives banks of deposits that they could have used for their own investments and loans. Secondly, these payment giants have begun to provide financial services themselves, such as consumer loans, investment products, and insurance. This is bad for commercial banks, as it takes away an essential part of their services, and can only get worse if they decide to expand in more financial services in the future. So how does this relate to CBDCs? As already discussed, central banks control the economy by dictating the base interest rate that commercial banks can use to give out loans. However, super apps like Alipay or WeChat are not commercial banks. Therefore, their interest rate cannot be controlled by the central bank by issuing a base rate. This creates a gap in the effectiveness of the central bank. It has no influence over certain key lenders of the economy, and this affects its control of the country's overall monetary policy. A central bank digital currency can help prevent this. The CBDC will be issued by the central bank and will be kept in a digital wallet within a commercial bank. The Chinese government hopes that a government-backed digital currency would encourage its people to start using the digital wallets stored in the banks, rather than those in the super apps. This would keep commercial banks relevant, and let the central bank keep control over the supply of money. We should note that the super app problem is not exclusive to China. Western tech giants such as Amazon are considering entering in financial services. This is another reason why central banks around the globe are pushing towards CBDCs. Although the threats posed by super apps and private digital currencies certainly led some governments to take immediate action, there are real benefits to having a CBDC. Some of the benefits include a movement towards a cashless society and increased financial inclusion. CBDCs can also help to make a safer and more efficient financial system, for example, by making anti-money laundering checks easier and improving cross-border payments. Implementing a CBDC will help foster the financial technology sector, which relies on a technological environment and online payment systems more than other sectors. It will also help boost competition and innovation, especially between fintech companies and incumbent banks. But as beneficial central bank digital currencies can be, they also have their darker side. For example, a CBDC may allow the owner of a central bank, the government, to hold information or monitor its citizens and their transactions. It is also not impossible to imagine CBDCs being programmed so as to block certain transactions entirely, such as for books, newspapers, or to organizations. Also, an effective cyber attack may bring a CBDC-based country's economy to its knees. At any rate, CBDCs appear to be the future. The Bank of International Settlements, which is a club of central bankers, says that within 3 years, about 1/5 of the world will live in countries that have central bank digital currencies. Thank you for watching this video. If you enjoyed it, please leave a like, comment, and subscribe for more great content.